few years that we've been coming here. So I'm going to go ahead and start this session on pricing and costing. So again, the idea or the concept here is to try to give you some ideas and some strategies that you can use in the system to effectively, price your customers and do it in a way that requires the least amount of maintenance. Because the reality of it is Acclamare has a lot of pricing functionality in it. When you start to compare Acclamare with other solutions that are out there on the market, particularly those in the world of ERP for wholesale distribution, I mean that's where the differentiation actually starts. I mean, to a great extent. Wholesale distributors like to price in lots of different complicated ways, and so the beauty of Acclamare is there's all kinds of ways to pull that off. In our pricing logic and pricing engine, it's one of those areas where the system is unique, and not necessarily a lot more unique than prior distribution packages that some of you are on. But if you weren't on a distribution package, if you were on some just basic accounting system, this is where you'll find there are huge differences between generic accounting and wholesale distribution. So what we'll cover is different methods that exist, both direct methods. So when I say direct, I'm really referring to those things that you can do that actually impact an item price on any given line on a quote or an order or whatever the circumstances are for your interaction with a customer. Indirect pricing methods would be ways to affect your margins, generate more revenue, but not necessarily change item prices. So we're talking minimum order fees or minimum line charges, surcharges, bottom line discounts. These are all ways to impact overall margin on an order or an invoice without impacting individual item prices. I'm going to spend some time talking about pricing contracts per, again, requests and feedback that came in about things that you wanted to see in this particular conference this year. I'll go into different strategies in terms of things that you can do or you might want to consider that might make things easier. I've worked with a number of accounts over the past couple of decades, and I've seen real simple pricing models, and then I've seen really complicated ones. Usually the more complex require all kinds of maintenance, and I would say the reason they're so complicated is because they've kind of evolved over time and never been really evaluated for their merits. Just kind of, this is how we did it. This is how we did it back before we had a computer system. And then this is how we started doing it with our first system. And so it's just kind of perpetuated as a result of that. And then literally we've got customers out there that have, some that have 300 contracts and some that have 5 contracts. But the company that has 300 contracts might have a total of 5 lines per contract. And then we've got a couple customers out there that have 5 contracts and they've literally got 5,000 lines per contract. So, again, there's all kinds of ways to skin that, but I'm just going to try to present some ideas that perhaps might be beneficial for you. Talk about purchase order costs and where they're derived on POs and how you can impact that. And then we'll look at the price and cost change interface within Acclamare and actually look at some of the functionality that we've just recently introduced there. So again, you have these slides on your flash drive in terms of where we're gonna go. I'm going to actually dive into a lot of these different things right in the application, just like I did with customer collections and the AR stuff that we looked at earlier. Promotions, customer price contracts, item brackets, product group brackets, price columns, the item and other methods. So there is a method or an order or hierarchy to how I actually put these in terms of bullet notation here. So typically speaking, I mean, if you let the system go through its own pricing logic and engine and you don't manually interfere, then the hierarchy starts with promotions. They actually override pricing contracts. Pricing contracts, you know, come next. And it's interesting because, I mean, a customer can have how many contracts? Unlimited. Okay? Unlimited in Acclamare. I mean, there's no limit. So you can assign as many contracts to a customer as you want. So then what contract for a specific customer, if you have a specific customer and they have 10 contracts, what contracts override the other contract? Well, there's a priority within the contracts. We'll look at that. So contracts are ordered by that priority. What happens when you have a contract, which again, within a contract, you can have, you can price items on a contract by family. You can price them by product group. You can price them by item. And so what happens in the scenario where you have a contract where you have a product that's priced, product group that's priced a certain way, and then an item that actually resides in that group, but they're all in the same contract. So there's a hierarchy to that as well. So contracts with, you know, the, you know, lower priority number in terms of this priority is number 1, that means it's a top dog. That thing's going to override other contracts with a higher number. And within a given contract, it goes from more general to more specific. So the specific, item specific would override anything else. Product groups would be next, families would be next, etc. So there's got to be all kinds of ways to look at that. But just in terms of, so we go promotions, then we go customer price contracts. But again, we'll look at these because they're so flexible and there's so much to them. Then we go to item brackets. So at the item level itself, if you have a bracket structure, buy 1, this is your price, buy 12, this is your price, those kinds of setups, then that would come next. Product groups, again, more general than the item bracket specific pricing. So that would come next. Price columns, it's not like your traditional price column, but still it's pretty effective where you can basically set up a pretty simple structure where you're like, we're going to give this customer price level 2 pricing. And so instead of getting standard item list price, instead of getting just item list, price column will actually say, well, they get list less 10 on everything, unless the item the customer is requiring is one of these. Okay, so, and we'll kind of look at each of those. Other methods that aren't necessarily automatic that you can use for pricing in the system, obviously quotes. Quotes that are out there, if they haven't expired, then obviously the system will prompt the user. There's an existing quote for this with this price, do you want to apply it? Item sales history, same kind of feature where you can look at a customer's archive history, see what they've paid for historically, and apply that price right to the item as well. The price analyzer, I'll look at that, show it to you a little bit more when we look at sales order entry this afternoon, a little later. Of course, manual override is pretty straightforward, but there's some features to that we'll also look at. All right, indirect pricing strategies. So indirectly, these are the things I was talking about as well that can impact your overall order margins or invoice margins. Order source as it's related to bottom line discounting. So I don't know that I'll spend too much time talking about this, but basically you can create a structure for giving bottom line discounts that are associated with how you took the order. So you can set up, for instance, if the customer calls in the order by phone and you have to take it in person by phone, then maybe they earn a very small bottom line discount, as opposed to if the order is submitted via fax, then maybe they get a little bit better discount. If the order is submitted via email, maybe they get a little bit better discount. If they entered their own order online, then maybe they get a little better discount. So these are just other strategies that you have where obviously you're trying to encourage the customer to do more of the work and utilize less of your resources. All right, minimum order fees, pretty straightforward. If you don't order at least $50 of something, then we're going to go ahead and charge you some additional fee. It might be just a dollar fee, or it might be we're going to charge you up to $50. Whatever you like to do. The idea being that, if we go back to talking about Walking Bear, one of the things that he used to talk about there too is that just to invoice a customer, just in terms of the overhead, to take the order, to process the order, to go through all of that, basically if you go through the whole thing and analyze it, you're looking at $25 to $30 minimum just to process a ticket. So if they don't, purchase enough goods to at least justify that, then, maybe you want to utilize some kind of minimum order fees. And again, they can be by customer. So important customers that you do analyze and you generate plenty of margin on, so obviously you don't apply that to them, but this is one of those things where maybe you want that customer to go somewhere else. Any of you remember or have had an opportunity to listen to a presentation from Bruce Merrifield? So Bruce Merrifield, he's kind of an industry distribution guy. He's done a lot of consulting and speaking over the years, talks a lot about this kind of analysis, looking at your customers, and basically says you analyze that, figure out whether that customer is actually making or losing money for you. And if you're losing money with that customer account, you can do basically one of three things. You can let it go and just keep on doing it. You can talk to the customer about how you can improve your position with them, or you basically, as he said it, you can fire your customer and let them go paralyze your competitor. So, whatever, your choices may be, you have to make a decision. But these things all factor in to just trying to make sure that you create kind of a win-win between you and your customer. Surcharges, freight charge tables, and freight allowances. We do have a couple of customers that are utilizing those as strategies. They've really analyzed their product mix. They've analyzed how much they pay in shipping, what it costs to send to different zones and areas, and so as a result of that, they've created freight charge tables for their customers. They really spent the time to do the analytics on it, and found that was another way that they could generate income and also encourage more purchasing with these strategic charge tables. So minimum line charges for key items. So if you have an item, that customer is likely not able to get anywhere else, any of your customers, those are items that you really would say, we should make at least this much money on that item. It should be sold in this neighborhood. They should buy at least this quantity, that kind of thing, because they can't get it anywhere else. All right. I'll dive into the price contract now. Let's take a look at that, and then we'll go through some of these other things. So let me hop back over to the application. All right, let's go ahead and just start by looking at the price contract. All right. Contracts are really easy to create, set up, define, etc. So when you initially start working with any kind of contract, you can create a generic contract, or you can create one that's customer specific. So here's my 2 cents on this in terms of how you can use it in Acclamare and maybe how it can apply to your business. So for some companies, what they went ahead and pursued, which I think is pretty good, they have defined basically 2 to 3 general contracts. So a general contract that they're going to apply to virtually, 99% of their customers. And it covers the bulk of the items that they don't want to have to worry about pricing all the time. One customer in particular that I'm thinking about has around 400,000 part numbers in their system, and they only stock about 7,500 of those, but they literally have access to sell some 400,000 different parts. And so how are they going to price that? I mean, particularly all those items that they don't stock. So what they went ahead and did is they actually assigned to all of those non-stocked items, they assigned a particular code. They use a family code because they have product groups that they use for other things. So they assigned a family code to non-stocked items in particular. And that allowed them to say, okay, we've got 3, for them they got 3 different types of customers, or 3 different levels that they like to price their customers at. So they created 3 generic contracts. And those 3 generic contracts, they went ahead and assigned their customers to them. Let's just go ahead and create one here. Let's go new, and if I can use my mouse. Okay, so you can add customers to a contract in bulk. So these are your options, and for them this kind of worked out well because they already had their customers specified in types. So they would go through waves. They have probably 20 different customer types, but they know by those types, basically these 6 types are class 3 pricing. These 4 are class 2, the others are in this class. So, you can go through this in repetition to add customers. You can do it by class or by territory. You can do it by a range of customer accounts, by active dates in the system. You can then choose, when you create this relationship of the customer to the contract, what the priority is. I'll talk about that in just a second. Or whether or not family discounts or customer bracket pricing or customer bracket setting is applicable on product group brackets that are in your contract. So let's just go ahead and add a few customers. See what I've got here for data. We're taking a shot in the dark here. Oh, all right. So in this particular type of customer, we went ahead and added 13 records. So one thing to be aware of while you're in here and looking at when you're adding customers to a contract is to realize that if the location is left empty, then that contract applies to all that customer's locations. If you want it to be location specific, then you would specify this customer and this location. Priority is user defined or controlled by you. So here's my advice. If you're creating a generic or general contract, then I would start by creating this generic contract with a high priority. Something like this. Knowing that I might create more specific contracts in the future for any of these given customers that I'll want to override this generic one. You know, because again, there's no limit to how many you can have. It would be a real stretch for anybody to have, you know, 10 contracts per customer, let alone 100. So, you know, you're safe, you know, with the number like this. All right, you can then specify a beginning and ending date. Allowing rebates, again, goes back to what you're basing your pricing off of in terms of cost basis. We'll look at that in a second. Family discounts, again, use customer bracket. So let me just mention again customer bracket, what that's actually referring to here, because it also gets used. It's like one of those multi-purpose types of values. I don't have very many that are like that, but this happens to be one. So if I go down here to orders and invoices section, and I come here to this pricing strategy fields right here. So pricing bracket, basically, if I leave this to 0, then it just means that they don't, if I have any brackets in the system, when I talk about brackets, I mean, again, if I buy 1, this is my price. If I buy 12, I get a little bit better price. If I buy 24, I get a little bit better price. Okay, that's what I'm referring to as bracket type of pricing. So your pricing bracket, if you were to put in a 2 in here for this customer, anytime the pricing engine ran across an item that had a pricing bracket involved with it, and it might be in a contract, which is what we were looking at with that flag a second ago, might be in a product group, might be in an item. Doesn't matter, if they buy less than the quantity in bracket level 2, they buy some less than value, they're still going to get the bracket 2 price. So that's really what that's referring. That's what it's referring to. This also is applicable for they're on price level 2 if you use price column. I'll show you that as soon as we finish with price contracts. I'll show you that simple setup for price column because I really like it, and it's a really simple way to ensure you price everything and that nothing sneaks out your door with some bogus price on it. Okay. So that's what use customer price bracket is referring to here. And then of course, you know, what's the date range on when this contract is active or not active. Okay, so this is the customers area that we're looking at here. Each of these 3 links that you see over here on the left-hand side represent other grids where we can put in specific family, group, or item pricing. So again, if I'm putting together a generic contract, very general like this, if I had, for instance, all my non-stocked items, and obviously that's not the case here with this demo database that I'm using, but if I had families set up, and I can use any of these families that are in here, if I had one that for all our non-stocked items, we tag it and say, this is in a non-stock family, or maybe I even want to be more, maybe I want to be slightly more diverse than that. If I have, you know, 392,500 virtual items out there, like what I described here a second ago, maybe, you know, there's 50,000 of those that they all want to have as, this is non-stock, but it's in this category. And this is non-stock and it's in this category, and this is non-stock and it's in this category. In that scenario, then I could go ahead and let's just give you a good visual here. We'll go over here to item families, and I'm just going to go ahead and I'm going to cheat. non-stock, and we'll say, you know, lamps. I should just turn that on if I want to cap it. All right, non-stock lamps. Let's say this is non-stock bulk. Okay, and we'll say this is non-stock.
Can you copy and paste that description instead of retyping it?
Like, you know, just highlight something like this, you mean? And yeah, so it's like Control C, Control V. Yeah.
Okay.
Yep. So let's go with those three for right now, just to give you an example of what I'm talking about here. And how fast that enumeration is going to update in here. Thank you, Bailed. Come right back. Yep. Okay, so I could go non-stock lamps. Now, just so that you can get a kind of a clue here again, if you get a red X or a little blue eye or a yellow warning, whatever, these are all visual clues in the interface that are intended to help you know what you can and cannot do. So it says the price basis you have chosen is not valid for family-based contracts. So that's speaking of the fixed formula that I was using just a second ago. Has to be variable. It can't be fixed. And just to give you an example of why, what's the difference? Because I'm going to get hit with it anyway here when we look at the others. I'll just talk about it right now. So fixed formula versus variable formula. Fixed formula would mean that when I put in, when I indicate it's fixed formula and I put in whatever the formula is, let's say it's cost up in some percentage, the system's going to calculate right now, because it's fixed, what that customer price is for that item for this contract, and it's going to lock it in. Well, it can't really do that for a family of 10,000 items. That doesn't make sense. Okay, it doesn't store that. We're not going to keep a record of those 10,000 items and keep that price out there and say that's always the price. It just isn't logical. So you can use variable formula, which means we want the system to apply this formula every time this item is purchased on a quote or on an order or in a price and availability. Go ahead and price it, knowing that that price could fluctuate based on whatever the cost is, if it's a cost-based formula. Or it could fluctuate if it's based on list price, if list price is moving. So that's the rule that you got there. Cost up. Okay, here are your various options. I'm not sure that there's much that we would have to go over here in terms of the formulas. Most of you know them. They're pretty self-explanatory. Cost up, and then I would of course go ahead and set my basis, which we'll talk about in a second when I get to that column. List down, the list price of the item is the basis. Margin, obviously cost is the basis. So list up, list multiplier. This is just different ways for different industries to actually look at it. MSRP down, MSRP multiplier. I think those are pretty straightforward. So in this case, I'll say it's cost up and it's cost plus 50, and then I can go ahead and establish what my basis is. Now, we only have a few customers out there that do vendor rebating, where they earn vendor rebates, but the companies that do it, it's like bread and butter to them. I mean, it's how they make their money. If they didn't have vendor rebates, then they'd be worse than a nonprofit organization. I mean, they'd be giving away product. It'd be a charitable organization that would be donating. So we actually have the ability, if you have rebates set up in the system, then you can price off of that rebate for those kinds of companies. So you typically buy the item from the vendor at $4, but you've got certain customers that when you sell it to them, you've got to sell it to them for $3.75. Same item costs you $4. So, and that's a true, real deal out there for particularly in plumbing and electrical wholesale. They have those kind of scenarios that that they then work out an agreement with the vendor to say, when I sell to this particular contractor or this company, I need you to protect me. And they'll say, okay, well, we'll ensure that you get, we'll rebate you to ensure that you'll get 20% margin on anything you sell to them. But you have to file for the rebate. So you buy the stuff, it's in your warehouse at $4 a piece, you sell it for $3.75, and then you then file for a rebate claim with the vendor, which then basically allows you to get a rebate of, we'll say 70 cents, per unit to get you down to a cost of $3.30 on that item you sold for $3.75. That's how it works. And so they want the pricing to be set off of that $3.30, which is the vendor rebate cost in the example that I just gave you. All right. So that's why that's in there. So last cost is the last cost from the item maintenance record. There are several, there are a couple last cost areas in the application. We store last cost in the item record. We store last cost in every vendor item record. So if you buy an item from 3 or 4 different vendors, then let's say there's 4 vendors out there, then you would have 5 last costs for that item. 1 in the item maintenance record, 4 in each of those vendor item records. So, that's your last cost. I mean, the system uses the last cost from the item record when it comes to price contracts. It doesn't go look at the vendor record for the last cost value. So you can lock the last cost down so it doesn't update if you want it to be static and still have a dynamic last cost in your vendor item record. Yeah.
We just spent a few hours a couple of weeks ago on trying to understand the difference between last cost, average cost, company-defined cost, unit cost. I think there's like 4 or 5 cost ones out there. Could you?
Yeah, absolutely.
Thank you.
So last cost, again, is a static, or can be a static field in your item record. So just go pop open an item record here, and we'll look at that record because it's all a part of what we want to cover in this session. So, all right. So there's my last cost value, as you can see it right there. Just get this all structured here. Okay, so I have a last cost value right there. And then in the vendor item record, and I got lucky, this vendor, or this item has a couple different vendors on record. So let's just, oh, I see. Oh, I got them all. Okay. So on each of these vendors, they each have their own last cost. And so in this case, on this particular vendor, 1713. This vendor above it, 1148. This vendor above it doesn't have one at this point in time. So there you have right there 3 completely different last cost values for each of those vendors. And that last cost value will update with the receipt of each new purchase order. So when you receive a PO, the system is going to update that vendor item record with that vendor's respective last cost.
PO or invoice?
PO receipt. So purchase order receipt. Now, if you happen to have to do a unit cost adjustment, like you receive in an item and the cost is $17.13, and then you get the bill and you're going to put in the payable, and then you do a unit cost adjustment to say, well, that cost was wrong, and it was a mistake and it should have been this. When you do a unit cost adjustment, it's not only going to update and fix any issues in the GL, but it's also going to fix any issues that you've got on existing sales orders or sales invoices historically. It's going to fix your inventory layers, and it's also going to update the last cost for that vendor in the vendor item record. So those are all things that the system is going to touch and work on. So you'll see this flag right here. Allow system to update last cost. That is specifically at the item level, not the vendor item level. That's the item level. So that vendor item record, that's going to give you the last cost every time you've bought an item from that particular vendor. And again, it's populated at the time of purchase order receipt post. It can be updated by a unit cost adjustment or by somebody manually manipulating it, but it's going to update with every purchase order receipt. Again, we've added this flag simply because some companies are like, I want to use the last cost as a static value that I'm going to use as a basis for doing my pricing, because they have another use for company defined cost and they don't want to use it. So let's just talk about what Brian was asking about a little bit here. So he said, there's several different costs in the system. Indeed there is. So I just talked about last cost. Company defined cost is really only stored right here in the item record. It's not stored anywhere else. The system, Acclamare, does not one thing to impact the value of company defined cost. It would be called standard cost in systems that you're more familiar with. Yep. So systems to remain nameless, right? So that is literally what it is. It was always confusing to us, just so you know, to educate people on standard cost, because a lot of people would be like, well, what does that mean? Yes, that was nebulous to them. I didn't know what it meant. And we'd always say, well, it's just a cost that your company defines.
Hence its name.
No. Yeah, hence the name, And what you'll see in the database is that it actually is labeled as CD, Charlie David cost, CD cost. All right, so, and again, that is used as a basis for doing your pricing. So if you're doing margin-based pricing to your customer, if you're doing some kind of cost up, you can use company defined cost for doing that. And again, it's a static value that only gets edited or modified by you. Whereas last cost can be totally dynamic. So there are some companies that price off of last cost, and they want it dynamic, because they're just going to, whatever I paid for it last, that's what I want the margin to be based on, and run it. So for companies like that, that's terrific. But for some, if their costs are too volatile or going down at different times and they don't want to pass that along, then they don't want to price off of last cost, or they want to lock in a certain value. So that's last cost and that's company defined cost. In various areas of the system, you will see something that we refer to as actual cost. Which probably should be called approximate cost. It is actual to the system at the time that you see the amount displayed. When you see an actual cost displayed, the system says at that moment, right then, based on layers that are currently on hand, that's what the cost would be. Okay, it's an average. It's an average of the layers that are on hand. Okay, so we call it actual to some extent. It's not always that.
I mean, it's not always that.
Wait.
If you have 100 in your first layer, depending on whether you're doing LIFO or FIFO, and you're only asking for 10, it's not an average at all. It's just pulling out of that. It's pulling out of that first layer.
Right.
But that 100 may be gone by the time you actually ship it and invoice it, and you're going to get a different price.
Or if they're asking for 100 and you've got 3 layers that it goes over and
Right.
it's, again, it's approximating it kind of the way I was talking about. But yeah, either way, it's doing its best to approximate what the actual cost on that is. But the reality of it is that might not be the cost. Going back to Kevin's example, they ordered X amount, but then they said, don't ship it to us for 6 months. You've turned the thing 3 times in that period of time. So obviously when maybe, 6 months later, when you receive in the product that's actually going to ship to them, cost could be something completely different. So again, it's an approximation at that moment in time based on what they're purchasing. Yes, Julie?
That company defined cost, if one was to use that, that can become very dangerous, or one hell of a lot of maintenance or upkeep to that.
Sure. Yeah, unless you use some kind of automated method for doing it.
Yeah.
Yeah, unless you use an automated method. So we've got, and we'll get to the price cost change utility that's within Acclamare here in a minute. But Advantage has a very robust item upload utility that does not only add new items, but it does all kinds of updating of costs in every field that exists in the item file or vendor item record. It's pretty elaborate utility that they have. So that's last cost, company defined cost, actual cost. Diane.
I was just going to say that we set all of our company defined costs to last cost.
That's what we do.
And then we use company defined cost as whenever we have a price change, we could rename that as replacement cost. So you can see in there, and that's what we do all of our quoting off of. So I can look and I know exactly what it's going to cost me today out of that bucket. I can see last cost. But then, especially at the end of the year when we have price increases, that's going to be the replacement cost of what's going to come next.
Gotcha.
Can you summarize that?
That's a good idea. What's that?
Can you summarize that? Because I couldn't hear.
Yeah, she's saying that for them, company defined cost for them is actually replacement cost. And they have a routine basically that's taking last cost and it's constantly updating their company defined cost. And they use that value for their quoting or for their pricing or knowing what to expect on different costs for their items.
Well, no, we set that once. We set our company defined cost to last cost at a given point in time when we started using it. And now if we get a price increase from a vendor, we go in and change company defined cost. And now that's what we're going to quote off of. That's what we're going to price off of. So that we always know what our current inventory is. But we know if I'm quoting you something that's 6 months out, we're going to quote it using that company defined cost.
Yeah, we've got
my new pricing.
several customers out there, quite a few that I've worked with over time, that actually have a routine, a job that runs on a regular basis, that actually looks at the last cost value and multiplies it by some factor to increase the company defined cost by 2.5% by 5%, whatever it is. And it's just in the background, transparent to the end user, and it's updating those values based on last costs, so that there's always kind of a buffer in there that they're building in, and then they do use that value for their pricing.
That's a good idea too.
So it's an easy way to do that. Okay, so that's last cost, company defined, actual. Okay, trying to think of, you would see in the database, you would actually see fields that say cost. Anytime you're in the actual database, looking at a sales invoice line or a purchase order line, sales order line, and you look in those at the cost, sales order line, I shouldn't say that, but definitely on an invoice or at that time at a purchase order, that's considered to be the cost of the item that's going to post, you know, when that thing actually going to hit the general ledger. All right, that's what's anticipated. Yeah.
In kits, what do you do? Currently, in our current system, if we have a kit, we leave that last cost blank, and the system will figure what the actual true last cost is.
Yep.
Is that the same in this, or?
You want to answer that?
Say it one more time.
In a kit.
I'm sorry, I'm
That's fine.
coding
No.
and I'm thinking about my code. I wasn't listening. I'm sorry.
In a kit,
Okay.
the system we're using now, we don't put a last cost in.
Okay.
If we do, it just holds that last cost forever.
Okay.
And won't be a true margin then, so we leave that blank. So then we enter the customer's order in a kit, and the system just figures out what the current margin would be.
Okay.
So in a kit in Acclamare, would you just leave that cost field blank? Continue to
Leave it
that
0 and then it'll roll it up.
Yes.
blank? Okay,
Yes.
okay.
So is that
Yep.
for list price? That's why I don't want to uncapped values here, but actual cost, what does that control the system?
What does actual cost control?
Inventory valuations, purchase orders?
I mean, actual cost is obviously what posts to, I mean, let's just put it this way. Actual cost is a moving target because in a LIFO, FIFO, weighted average system, you know, it's vacillating based on receipt of goods and selling of goods. So when an invoice is actually created, so at the time that you actually take a sales order and say, make an invoice out of this, at that moment in time, the system goes out to the inventory layers. It actually reduces the quantity on the inventory layer at that time and takes the cost from the layers that are involved. So if it's last in, first out, then it takes that last layer that just came in, uses it as the method for costing, and that's what gets posted to the GL. That would be actual cost in that scenario. FIFO, first in, first out, looks at the oldest layer that's out there, and then goes ahead and pulls that quantity from that layer. If it spans multiple layers, then it's still pulling all of one layer at that cost, pulling all of the next layer at its cost. That's actual cost. It's going with that invoice. It's going to end up averaging obviously those layers to produce one average cost value on those sales invoice lines. So, or that sales invoice line. That's actual cost. So, I mean, when we think of actual cost in Acclamare, we think of what exactly posted the general ledger. I mean, that's what it is to us. It's not a value that, like I said a minute ago, when we were talking about in a price contract, I want to use actual cost. Well, we're trying to use that to be descriptive to the end user. But the reality of it is there's no way to know what the actual cost of that item that you just quoted is if you're not selling it for another 6 months or a year or 18 months. You know, somebody calls and says, what's my price? But they don't buy it for 6 more months. Cost could be completely different at that time. So we are capturing at that moment in time what we think that thing is, but it's not officially actual cost until it goes on an invoice and posted into the GL, or on a purchase order until the receipt is posted. when that PO line receipt is posted, that cost is actual. So to us, actual cost is really what hits the general ledger right at that time of posting. Otherwise, it's an approximation, you know, it's an average. It's pulling several layers in order to determine it, because again, it's a moving target.
There's an average cost field in there too, correct?
I don't think that we have a field for average cost.
I believe what he's referring to is if you're in a dynamic inquiry, when you go into the current inventory, they'll have the layers, and then down at the bottom, if you have the footer engaged, it'll show you an average or whatever.
Yeah, Doug, I went through this with Doug, and we came up with like.
So let me just see real quick. So where are you saying, Dick? Stock
If you go,
availability?
like in dynamic inquiries,
He's
then
saying
you
the
have
footer.
a layer or
You can,
multiple
you can
layers.
average
Yeah.
Oh,
You have the footer.
yeah. I mean, that wouldn't be.
Customize it at the bottom,
Yeah, I mean,
so
you
can
could.
average it.
I mean, you can stick an average on the bottom of any grid, but I mean, that would just be an on the
So there's
fly.
no average cost?
Wouldn't be anything to this, huh?
There's no average cost in Acclamare?
If you choose from an accounting standpoint to use weighted average as your costing method, then your actual cost is average cost. It's a weighted average.
Okay.
If that makes sense. I mean, so you can choose to use FIFO, first in, first out, or last in, first out, or weighted average. I mean, if you use weighted average, then that would be actual cost. And to us, when you see actual cost in the system, like Kevin just described a second ago, and I was describing as well, I mean, that's an average if what the customer is ordering spans multiple layers. So then what the system's saying the actual cost is for at that moment for that item would be an average, a weighted average, but it's not necessarily, again, used, it'd be used for pricing, but it's not being used for the general ledger. I mean, the general ledger, however you choose to cost, and I mean, you can't choose multiple ways, it's just we either use FIFO, or we use LIFO, or we use weighted average. It's not, you can't mix and match, that's not acceptable, it's just one or the other. And then the system actually pulls those layers, and if it spans multiple layers, it calculates an average. That make sense?
Do you have an IFO?
What's that?
Next in, first out?
Next in, first out? We do not do that.
You do not?
All right. Okay. So that's last cost. That's company defined cost. That's average actual cost. I don't think that I can, I mean, we've got something called a unit cost adjustment. That would be an adjustment to actual cost. So we do have a unit cost adjustment, but we don't have a field that I can think of anywhere in the application that says unit cost. But again, a unit cost adjustment would adjust actual cost on a sales invoice line or a purchase order line, purchase receipt line would be updated by a unit cost adjustment. Keep in mind, everything in the database, everything, is stored in SKU unit of measure. So all costs are stored in SKU. So if you have an item that you could break down and sell by the foot, but you typically sell it by, you know, let's say it's wire, let's say, yeah, reel, or it's wire in a box, you know, then let's say a box of wire is 50 feet. I mean, and you sell it by the 50-foot box. That's how you sell it. But there are occasions where you might cut it. I mean, it doesn't happen often, but maybe you would. Or you could go, you know, where's Jason? Bolts and nuts. You could go that kind of situation where they've got, you know, a per piece price, and then they've got a per box price, and they like to sell per box. Again, in the database, whatever the SKU is, if it's per piece or per foot, even though you're selling it by 50 feet in a box, what the cost will show in the database is the SKU cost. everything is in SKU. It's extremely consistent. Anything you look at in the database is stored at SKU, and there is always a conversion factor that goes with that line. So you multiply whatever that SKU cost is by the conversion factor, which is usually 1. I mean, if it's, I sell it by the each and that's the SKU and we sell that way, then it's just going to be a conversion factor of 1. System has logic. It's going to multiply every time by that conversion factor in order to derive, what you're seeing on the screen. Yes?
One last question, apologize. What is the inventory valuation report using, which cost?
It uses the cost right out of the layer. So if you're using, there's 2 different valuation reports I can think of. One that's detailed, actually shows the item and every layer. And if it does that, then it's literally showing you every layer as it exists in the database. So it's exactly what it is. And if you run a summary type of valuation, then it's actually doing its own average. Okay, it's doing an average.
Does the last cost get updated from a special order line?
Sure it does. Yeah, last cost is updated from a special order line, yes.
And the upsheet also?
Would update in the vendor item record and the item record, provided the switch isn't shut off. Yep, yes it would. Okay.
You said the switch isn't shut off?
If the switch isn't turned off, that's what I was I just showed you that just a second ago. So this switch right there
Yeah.
allows system to update last cost. If you turn this off, then that last cost right there is not going to change. However, the vendor's last cost value is going to change right there for each individual vendor.
And so therefore, if you had, in this case, 3 vendors and 1 item master record, so is that saying that the last cost will always come from the vendor maintenance records? If you turn that switch off?
If I turn this switch right here off, then I'm telling the system I'm going to maintain it statically myself.
Okay, so it won't use last cost?
It will not ever change that last cost. It'll continue to update the one at the vendor record level, but that one isn't going to get changed.
And so will it value the inventory off of which record?
So
Vendor or the
the
item?
valuation report's always going to value off of the exact layer costs. Has nothing to do with these costs. Okay, the inventory valuation is going to go right off of the layer cost. So in case this item right here is on hand.
Which is off the PO receipt.
Exactly. So there's my layer right there. This thing was received on the 24th of, on the 3rd of January 2014. I received 400 feet. I've got 200 feet remaining. That's the cost. That is exactly what the cost was on that item.
And that's the last receipt, so therefore that's the last.
That's right. Yep. But if I had unchecked that field and, it was 15 bucks, when I received this, it wouldn't have changed it to $17.13. It's
But
still
then you have to
$15.
change it back. If you got a special buy. Go ahead.
No, go ahead, Dorothy.
No. If you have a special buy and you happen to pay your outside salespeople on,
Well, that's what I was
oh, go ahead.
Is there a commission button in that item maintenance that you can turn on and off? If you normally pay 15 bucks for something, but you got it for $1. So you don't want the salesman to reap the benefits of your good purchasing.
So you can
ability.
set your commission plan off of whatever cost you want. Like for instance, you don't have to set commission off of the actual cost. You could say I'm commissioning off of
Last cost.
exactly last cost. I'm commissioning
But if
off
that one
of
was your last
But
buy,
then it would go in.
company
But
defined
that would be
cost.
another great use for company
Company
defined.
defined, so you can
Right.
set it.
Yeah,
so
just
you
leave it
set-
at 15.
Right.
If you set your last
That's
cost
correct.
at company defined.
That's
you can
correct.
set it
And
off
that's why
company
some companies actually do what I was talking about, where they put that 2% or 5% on that value and they let it update. And that's so that they can put, freight and other expenses that they don't necessarily ding their salesman directly with. but they'll communicate with them and say, hey, we're not going to worry about all this other stuff that we could potentially pull off your commission. We're just going to put in a 3% increase on our cost, and then we're going to base your commission off of that. You know, and if you happen to get a special buy, then that's up to you. I mean, you know, you can still base it right off of that company defined cost. And you know,
how did you update your company defined cost?
so it's the static cost. So you have to do it manually, or you create a routine.
I wouldn't want to do that on manual.
No, and I'm just saying there's nothing in Acclamare that does it, except for you go do a price cost update yourself. There's a utility to do it. You can use Advantage's utility to do it, or you can just have our partner, whoever your technology support person is, they can just write a little script, little routine that runs every day. It can run multiple times a day, it can run once a day, whatever you want. Just goes out there and it updates the value.
And that's what you're using.
We just did it once so that that company defined cost equaled last cost. So that's what we were starting with. And then we started using it as if we get a price increase or sometimes a price decrease, then we go in there and we put that new price. So what we use company defined.
Manually for each item?
Yeah, but I don't have vendors that give me a list of 1,000 parts. Otherwise, I wouldn't do it manually. I'd have Bert help me with it. But most of the time, it'll be, you know, a yearly price increase, and it's on 20 pieces of, you know, 20 different part numbers, and I'll just go in there and put that
She's
cost in there.
manufactured.
Any other questions on cost that we kind of exhausted? We haven't quite exhausted it yet. All right, so we've talked about last cost is pretty easy. It's at the item level or it's at the vendor item level, and we've talked about kind of the things going on there. Company defined cost is the simplest one of all. It lives right here, and it only changes when you change it or what routine you have to do it. The most nebulous one, obviously, is actual cost, because it depends on the context of the conversation. All right? We're just talking about what's the system actual cost, what's it using as actual cost when it's pricing this quote or pricing this order. Well, that is, I mean, there's no accounting transaction that has transpired yet. I've not invoiced the customer. So, I mean, that's, again, the context of the conversation matters when we're talking about actual cost. But the reality of it is that it's either dead on the actual cost in a layer, it's some weighted average of layers depending on the quantity involved, and then, of course, when you post, it is exactly coming out of those layers at what it was, and so that's your actual cost. So, now, additionally, there's another cost that we'll bring up right now while we're talking about costs, so we don't have to come back to it. Okay, so if I come into a particular vendor record like I'm doing here, let's just see. If I buy 200 feet, or I have to purchase in increments of 200 for this vendor, 200 feet, and then, you know, there's my cost. So this vendor though, okay, so I want you to see the difference. This vendor has a cost bracket. This vendor that I have highlighted has a cost bracket. Bracket type cost. So here's their bracket. And there's the value. Okay. The next vendor down, if I select this next row, has a bracket type of none. So what I want you to notice is that this field now says distributor cost. There's no bracket. That says straight up, what's the distributor's cost? Right there. That's what's going to go on a PO that you create for this item for the vendor flex.
Can you show that other vendor again?
I will.
Thank you.
Okay, so if I go back to this vendor, now that field says vendor list price.
Bracket cost.
It doesn't say distributor cost now.
Mhm.
It says vendor list.
It says vendor list because in the bracket type you put cost?
No.
You got a
Because there is a bracket.
Because
Okay,
there's a
so
bracket.
here you go. If I change it to none, this field, whoop, says distributor's cost. If I change it back to, and it's mainly for this, a bracket that's based on discount percent. So if I set up a bracket that I buy stuff from a vendor and they say if I buy 200 feet, then you get 20% off of our list. If you buy 600 feet, you get 30% off of our list.
And that's why the vendor list price is pulled in there.
That's right. So that's just saying we with prior systems, they forced you to set up a bracket even though you didn't necessarily buy in a bracket. It's just you had a straight up cost. And then you had to go define a bracket anyway.
Discount
Well,
zero.
we didn't want to have to do that. Created a lot of excess records in the database. And so to alleviate that, we basically put that logic in here to say, well, if I don't buy from this vendor in a bracket, then I just want to put my cost straight in there and not worry about a bracket. Okay? So that's now distributor cost. That's your cost. There still is MSRP at the item level, if you want to consider that your vendor list price. I mean, if they have some other suggested list price out there. Yes.
Is last landed cost calculated number, or is that?
Last landed cost is a calculated value. So for those of you that are not using landed cost, and that's most of you, but you can, I mean, last landed cost is when you actually use the land costing feature within Acclamare, you have the ability to roll in.
Right.
Well, yeah, I mean, you can, it's unlimited what you can roll in. There's no limit. I mean, you can create as many different
Duty.
landed costing elements as you want. Yeah, the
Bring the
typical
container
ones,
load in from-
freight, duty charges, you know, other surcharges, whatever they may be, those tariffs, you can roll all those in. When you go through the landed costing process, it's at the time of receiving. So you can do it right when you receive the goods. You can post the receipt and have somebody come in shortly thereafter and do the landed costing pieces and roll it in. But that is a calculated value by the system that it would be taking according to how you set up your landed costing elements. I mean, you can decide how you want those distributed into the cost of the item.
What's going to show in dynamic? On the layer cost. Going to show the landed cost? Or
It's
the-
going to show your landed cost.
No, you can't have it show both. You want to know what the...
I mean, when you depends on, I mean, when you say the dynamic, there's 20 inquiries in there.
It's about
So, I
content,
mean,
actually.
when you look at the current inventory layers, a layer is going to be the inventory value, which if you do landed costing, that is going to include the landed costing element. So it would be in that view. I mean, if you're looking at the purchase history, then the purchase history right there is just going to show you the last cost without the landed element. So, because that's what was on the purchase order. It's not going to factor in those other pieces. So that's yet another couple of costs, you know, to consider in the application. None of those that we've just talked about are used for pricing a customer, though. All right. This obviously distributor cost and potentially the vendor list price as it pertains to brackets is used to calculate costs on purchase orders, but not on selling price to customers. Okay. All right, so going back to our prior discussion, seems like a lifetime ago. Okay? We were talking about pricing strategies, and we were talking about setting up a general contract or multiple general contracts that you could put customers on to basically deal with, I mean, let's be honest, in your business, most distributors, doesn't matter what the business is. The bulk of the items that generate all of their pricing work and generate most of their revenue, you know, are less than 1,000 items in most cases. Most cases, you're talking about less than 1,000 items that are the ones you really have to be more strategic, more aggressive, more thought, more everything involved, whereas some of the items are more, let's just put this on cruise control and that's how it works. So the idea here when you're setting up a pricing strategy is, well, those cruise control items that we don't want to have to micromanage, and we don't want to create a maintenance nightmare for ourselves, that's the whole idea behind setting up a general contract like this. So I can set up non-stock lamps are marked up 50 points above that actual cost value. Let's just change this for the moment. Let's change it to company defined based on some of the discussions we had in here. And then let's go to fixtures. And then let's, obviously would make little sense. I mean, we can make them all the same, but let's not be that bland. That's a little too vanilla. So basically the idea here is that these 3 line items for our 400,000 SKU distributor example that I used earlier end up covering 395,000, or let's say, you know, 380,000 of those items. Done. Okay, for customers, those 13 customers that are assigned to this contract. So now that's not going to take a lot of management. It's not going to take a lot of manipulation. So now what happens is that one of the customers assigned to this contract comes back and says, hey, when we buy these things, that's bogus. We don't want to pay that much. So then you know, use your negotiating seminar skills to factor in some kind of pricing that they agree to and that you like. And then you can set up another contract, okay? Set up a second one with a lower priority than 100 in terms of the numeric value. And then it will override this contract for those specific items or that group of items that you want to give them a better price on. Okay? And so then the maintenance becomes a lot easier if you approach it that way. Any questions on that? Do you get the concept? Several contracts if you want, but make a bulk one to cover the majority of your pricing issues and then refine it from that point on.
If a customer is in both contracts, which one will override?
Whichever one has the better priority, lower number. Okay, so going back to this tab, not a tab, this button. Okay, these are assigned a priority. So Dana Corp, this contract priority 100. If they have another contract that we create and assign to Dana Corp, then if we would set the number to 90 or 50. Or if we know that's always going to be their best contract, we put a 1 on it. It's going to override, you know, the other ones. Does that make sense?
But if you're going to the lowest common denominator, you don't have to have a priority, do you? Like if I have you at a general contract like this, or if I have you at a product group, and then you have another contract that's just for a specific item, wouldn't that automatically override the product group because it's lower?
If they were the same priority, that would be a
Or
pricing
no
engine
priority.
question. That you, I mean,
It's going to be random, really.
yeah, I would I mean, you should assign priority levels to them. If they have the
Oh, I
same,
thought the lowest.
Are you,
within a contract, if it was within the same one, like in this contract, if there was an item that overlapped a family, then the item would definitely take precedence. But if you have two contracts assigned to one customer and they both share the same exact priority, even though one prices it by family and one prices it by item, I don't think it's going to take it that level, because our idea behind priorities was that you would set
You're
them
setting it yourself.
so that the same customer doesn't have, you know, multiple contracts with the same priority level. But, yes, Jane?
What if the customer set the best price?
Okay, so.
Wouldn't that override?
We'll get
Okay.
there. Okay, we're gonna get there. That's a good question. Okay, before we get there, let's introduce a couple of other pricing methods, so then we can put the best price in better context.
Yeah, that's fine.
Yes, Jack?
Before we move away from contracts, is there a way, I have a customer who acts as a sub-distributor. On one specific vendor, we give them a better price than anybody else. So we'd like to have a way of setting up a contract so we don't have to specify individual items. We want to be every item from that vendor, but there doesn't seem to be a way of doing that I can tell. unless you tell me
So,
otherwise.
are you saying like, I think that the only way that we use a vendor cost as the basis is on a per item. I think you're right. I think it's per item.
Hey Jack, are those vendors all in different product groups? Does the vendor have items scattered through different product groups?
Yeah, I mean, that's a possibility.
They definitely do, yes.
Yeah,
So is that something that could be added as an enhancement, a vendor percentage or something like that?
so base the cost off of the vendor item record. Have a basis of the vendor item record.
Are you asking if you can have a certain margin on the vendor's cost?
Oh, Jack's question
Off the
is,
vendor- off-
Jack's
off
question
selling
is he
price for
wants
that
to be able to
item.
have a contract
So Troy,
where doesn't have to do it item by item, but he can do it by a vendor, basically.
All the items from a certain
he's actually
vendor.
asking for a different kind of filter to apply a margin to. He doesn't want to base it off any different costs as his regular selling price. He just wants to give that guy a better price
On a specific
on
vendor?
a vendor, on all the items he buys from that. It's not a different cost.
And what if the item has multi-vendors?
Well, in this case it wouldn't, but then,
Because then we
I
wouldn't, because
don't
then the
know.
problem
I
is we
wouldn't
wouldn't
have
know. I mean, it's, you know, if you got 10 layers on there.
How many
I mean, then
different
it'd be-
items is it?
How do you decipher that?
thousands,
Oh, that's
which is
great.
why we want to be able to do it.
Yeah, I hear you.
Are they the primary vendor
Yes.
in most cases?
Yes, in all
The rule
cases,
would have to
actually
be
for the
the
one
primary
I have in
vendor.
mind.
So the question is,
Families?
could they have a price contract
No,
that's
no
based
families
on,
on that.
so this customer, I'm gonna specify not by family group or item, I'm gonna specify by vendor. This customer buys anything from that vendor, then this is the markup on that. They just want to use the
Yeah,
vendor
that
as
would
their
be-
grouping mechanism,
that would be
basically,
the
rather
drawback.
than by family group or item.
You're not using families for anything.
Yeah, I mean, that's theoretically possible.
So you use groups.
Can you use groups?
How much
What about
how much
EDF?
more overhead do we want to add to the pricing?
Yeah, that would be
engine?
one of those things to probably bring up tomorrow in that afternoon session.
Which I'm not going to be at.
Oh,
which is
that's
why I'm
right.
bringing it up now.
Can have a job.
Gotcha.
That was on the list of things I was going to talk to you about tomorrow after.
All right. Yeah, I mean, that's, again, it's just a matter of how much overhead is it for, what's the bang for the buck, so to speak, you know?
You can have a job that just adds the
We do it
items.
on, we do it at
For
the
the
sales
vendor
order
nightly.
level.
You could one time add all the items to a contract. That's a slam dunk from the sequel statement. Just,
Yeah.
here's all the items you got from this vendor. Populate that contract with 1,000 items.
What's,
You're
but
adding new
what,
items, now
but
you're
what's,
adding-
so, if they're all for that vendor, but is there any kind of, is the basis just last cost or company defined, or what's the basis that you want to calculate what the pricing
It would
is?
actually be off well, what I call catalog price, but list price.
Okay,
We want to do a percentage. We sell an item for $100. We want to always be 10% off. So so it'd be $90 for that particular customer.
I got you for that vendor. So it's really just like you're talking about. It's either to blow them in there as individual line items for that vendor so they have to do it line by line. But of course, the bad part about doing stuff like that, just so you know, is, I mean, we create a lot of records. We'd prefer to not create 100 records if we could have one, or 1,000 records if we could have one. But
Big price contracts.
what's that?
So I was just thinking about a customer that has huge price.
Oh, I mean, it's, yeah, I mean, we're talking again about simplifying it as much as possible, not expanding all of that, you know, too many details in the contract. Let me cover another simple method here so that we at least get through some of this other material here. So let me just talk about price columns for a second. Not really true price columns like some of you might be thinking about. So basically we created an area called global price bracket formulas. So the idea here is some distributors, quite a few actually that we've worked with currently and over the years, do not have a list price on their items. They don't use the list price field. They don't have one. So, and that to them, because everything they do is price off of their cost. So there's really no reason for them to ever have a list. It's a fictitious value for them. Yeah, and you even get to the point where if you come from industries where they do have a list and you sit down with them and you say, what's your list price? And they'll look at you and like, what are you talking about? You know, and you'll be like, well, it's so obvious. What's your list price? They go, well, what are you talking about? They don't have one. And so then you're like, well, let's create one. And they're like, for what? You know? I mean, that's just a bunch of work for us. We don't use one. So having that in mind, problem is if you remember in my presentation here a second ago where I showed you the pricing hierarchy, it gets down to where it eventually falls through to item list. I mean, that's one of the options. I mean, it goes for promos, it goes to price contracts, it goes to item brackets, it goes to product group brackets, and eventually it's going to get to item list price. And so the problem is if they don't have anything set up for these 400,000 items, and they don't want list price, they don't have a list price, which happens to be the case in the example I'm providing, the 400,000. They don't have a list price. They don't want to create a list price for all those. I mean, that's just not what they do. They don't use it. Everything's based off of cost. So they price based on margins. And so they don't want anything, though, to get priced at 0 and sneak through. So this is one way to get around having to set up a list price and maintain a list price for your items. Global price bracket formula. So this is one way, strategically, that you can basically set up a pricing level. So you can set up a pricing, you can set up as many as you want. So if I go into this particular interface, I can specify how my basis is going to be. Let's just go and say level 1 is going to be based on company defined, and it's a margin of 25%. And then the next one's going to be margin, company defined, and it's 30%. And the next level's margin, and it's going to be 50%. Something like this. Once that's established, like this, if I was to go pick some customer, let's go over here to the customer record, and oops, oh my heavens, I have my own name, huh? Okay, let's set up a customer real quickly here, and then let's go ahead and assign a pricing bracket. Okay. All right. So now, if I go over to, let's just go into a customer quote. And let's throw on an item. Okay. So let's throw a pricing source on there and we'll just see where these are all being derived here. Okay. All right. So my price, I get a computed price here, and it comes right from that global price bracket. So this is a new customer. It's not assigned a contract. It's not assigned anything, and I'm choosing items, and they don't have any kind of special pricing. They don't have to have a list price, and I'm still going to get a price that gets caught for everything. So that's the idea or the concept behind a global price bracket formula. It's global, but it's very low on the food chain, all right, in terms of its prominence, where it lives. So going back here to what we were looking at before, it's a global price column or price bracket formula. It goes right here. So promotions would override it. Customer price contracts would override it. Item brackets would override it. Product group brackets would override it. You know, if you don't have any of this, it's going to fall through to this. You know how easy that is to maintain? What I just did, it's really simple to maintain. But it catches everything. So if you don't have an item list price, which is what this should say, item list price, you don't have that, then this catches it, and you don't have to maintain this. So that's really a nice, simple strategy to be able to catch stuff and not have to worry about individual item list pricing.
So that's constantly changing.
What's that?
That would be constantly changing.
Yep. Because it's not a list price. It's just the customer, when you buy this, this is what you pay, and it's basically a markup. I mean, if you do it off of company defined cost, it's not really constantly changing because, again, company defined cost is static, which is what we just did. So, I mean, that's just one method for you to set that up, and it theoretically isn't going to change any more than what your item list price would change because, you know, if that's a once a year type deal and that's when you update your company defined cost, same thing. Okay, now I don't have to worry about item list price anymore, particularly if it's not applicable to my business. Okay. All right. Okay, let's skip forward here for a second because I don't want to miss the price and cost change area. Okay, so let's transactions, inventory, price and cost changes. All right. This area is really a pretty simple, it's not very robust. I mean, we're not billing it as you know, Bert back there at Advantage, they have a really sophisticated item price update, cost update, item upload utility. It's really, it's nice. I mean, it's terrific. But, you know, it doesn't come as a part of the core of the product. And it's also, you know, besides having to pay additional money to Advantage for it, the reality of it is that it does a lot. It's graphical. It can do all kinds of stuff in terms of loading new items and things. But it might be more than what some of you are really looking for. And if, you know, hopefully if that's the case, then you can get away with using a utility like this that we have within the software. So let's start with how this works. If I select new in price and cost changes, and I come into this screen, I can provide an effective date for when this pricing or cost is going to go into effect. If I set it to some future date, then the system is not going to apply these changes. When I'm finished and I post and I'm done, it's not going to apply these changes until the night before that effective date. The daily routine is going to take care of that. Okay, and for some of you that are looking at the software, just so that you know, there are no manual forced closing routines, with the exception of close of year, which you have to click a couple buttons to close your year. But close of day, close of month, are really automated types of things in the Acclamare world. So there isn't a forced close of day. There is a routine that runs out there and does things as part of daily processes, runs at night, and would do this update. Yes, George?
Your general ledger, December, you don't want it to close because you got to wait for the slow CPA guy to come back to you with your last numbers, your adjustments.
It's fine.
How do you get that 1 month and not close for you?
You just leave it. You can leave it open or you can close it, which
But it
I
closes automatically, right?
actually encourage folks. Again, it's post to a prior period is the only way to get stuff in there, right? Post to a different period. That's the only way you could get stuff back in there. Again, controlled by security. So it's not like everybody could do it. But honestly, we put both of these in here for a reason. Okay. So you can close the year and say, all right, it's closed to prevent posting activity from going into that prior month and prior year. And when you're ready to when you get that stuff back from your accountant or whatever, just go in, hit reopen closed year, go put your entries in, and then close it again. It's very fast. It's very quick. It's easy to do. So that would be my advice in those situations. Okay, going back to pricing and costing. All right, beginning at item number, ending at item number, so you can put in a range, kind of like what Doug talked about yesterday in his workshop when he talked about physical count worksheet. I can do this for a particular group, for a particular vendor, by family or by warehouse. So once I went ahead and identified, who I'm working with, what I'm doing, there are several different update values that I have available to me here. But once I provided my filter, I want to go ahead and have the system go out and get the items. So it'll go out there and launch a routine to bring in all the items for that vendor.
If you don't select a warehouse, it'll update it for all warehouses, I'm asking.
That's a filter to pull in. That's a filter to pull items in. Okay. This is your stock list price here.
Okay.
So, this is the only value you could impact at the warehouse item or the stocked item level in this screen. Now, there's a lot of columns that are available to you, again, in your grid that you're not seeing here. So like, here's my last cost, here's my new last cost. There's the warehouse stock list price, there's the vendors. Now, that's the new vendor list price. So there's the existing one. Now, what does that vendor list price represent? Quizzing you guys. What does that vendor list price represent? If they don't have a bracket,
last cost,
then what does vendor list price represent?
The list price price.
It's your distributor cost. It's what you pay. Remember? Remember that field that flips back and forth?
Oh, yeah.
Okay, so that field in here is called vendor list price. If the vendor doesn't have brackets, then you are just updating straight up your cost that you pay on your POs. Okay, so that is literally what you're going to update there. Vendor list price, if they said, hey, this is flex, want you to know that we're going to go ahead and increase our list price, or excuse me, your cost in this case. We're going to update your cost, and we're going to do it by 5%. Then, you know, across the board, you could go ahead and pop that value in there. When you hit recalculate, what this can go out and do then is just go ahead and make a change, that kind of thing. Go out there and update values. You can uncheck lines in here if you had certain items you wanted to exclude. I don't think that's very practical, to be honest with you. I don't think most of you will do it like that. Just because most of the time you're going to get a sheet, a spreadsheet from the vendor that actually is going to have their values in it. So we recently added this upload, a vendor cost update spreadsheet that allows you, to ultimately, oh, I better not add lines first. Let me start over. So when I go ahead and select this option, I've done that on this version of this laptop. So here we go. There we go. Beautiful. Okay. So you can see it pulled in all the data behind the window there, just like it did a second ago. But now I have the ability to go out there and indicate on the left here, where my spreadsheet is. So where is it located? Click on this button, go find my Excel spreadsheet. Indicate is the first row, my header column. What column in the spreadsheet is the item number? If I'm not mistaken, I think we have a hierarchy of checking on that. I mean, it's vendor item number or...
Oh, yeah, yes.
Vendor item number, or it looks at our item number.
Right.
I mean, it tries to match their vendor part number to start with. You can indicate what the cost column is, and then, of course, what the unit of measure is that they're using, whether it's your SKU or whether it's per case pricing that's set up in their vendor record rather than how you sell it. You would have to choose whether it's, in their cost unit of measure basis or quantity unit of measure basis. And if there are multiple brackets provided, then you could have a column where the brackets are. So you'd be looking at a spreadsheet with item numbers, and that item could appear, potentially, you'd actually have it in a horizontal row there, item, cost, have bracket cost, or you could have all brackets in one column and have to be stringed down this way, or you could do it in multiple loads, a couple of different ways. I don't have any examples out there. Probably should create one so we can look at one. But idea would be once you go out there and you actually identify it, it'll pull it into this interface. It'll load it right into that spreadsheet grid that you see there. And so you can eyeball it, you can look at it, and then once you're good with it, you just go ahead and hit the OK button, and then it will pull it in, those results, it'll pull it in and match where it can match. Where it can't match, I believe it gives you a message if it can't match. And then obviously you can go through, again, back in this grid over here, you can uncheck the lines, check the lines that you want to have go in. You can manually manipulate pricing in here as you go down. If you wanted to just do it hand by hand, you could do it. If you wanted to just quickly update this, we talk about this, if you just wanted to quickly update a particular product group's company defined cost. You had some pricing, you just wanted to pop in there for 10 items rather than going into the item maintenance, looking up the item, changing it. If they're not in sequence, then maybe you'd have to pick previous, or next, to find your next one, make the change. Here you could just have them all right together and type in the changes. Yes, Jack?
Am I understanding though that this only works when the item vendor cost basis is is none? It's not gonna work if you use brackets?
It
does-
will work if you
it
use brackets.
definitely.
It'll do either.
That's why it has a bracket column in there.
Oh, okay, okay.
It'll do
I
either
missed
one.
that.
Yep. So this is, and the ability for it to do what I just showed you with that spreadsheet, pop it open and put it in, I encourage you can play around with it, because it doesn't commit the changes until you actually go to actions and post these changes. So, I mean, you can mess around with it, you know, test it out and look at how it's going to change things, impact things. If you don't want to do it, just bail out and don't save your changes. You're all good to go. So it's really, I think, something that will help a number of you that have pretty simple cost updating requirements like this. So, you know, enjoy on that. All right. It's almost 3 o'clock. You guys have held in there pretty good. I know some of you, I could see your eyes drooping a little bit, but let's go ahead and take about a 15-minute break or so. There's more snacks right there. I think there's like chips and guac and salsa and some drinks and all kinds of stuff. So just help yourself and we'll pick